far, we've covered quite a lot of charts resembling something like this sort of setup where we've identified low points, connected some lows and drawn an ascending trend line. What we need to do is we need to talk about what happens when this trend line breaks, and this is a classic example. What you'll often find is you will get a back test of a long-term trend line such as this one. The market broke through it, and it's almost as if it's had a couple of goes of trying to get above that trend line. But we do expect now that if it fails to get above the trend line, which it looks like it is, then we will come down and start testing some horizontal support lines. So anywhere on the way up that the market struggled to get above, that is likely to provide some sort of support, but we do expect that this share price will now go lower because it has penetrated an important support line. The more observant of you may have noticed that this trend line has actually already been breached at one stage. Now, this would have given a sell signal, only to rally, get back above the trend line, and then go on and make new highs. There is a chance, of course, that this could happen on this sort of setup, but we do not trade it on the upside because it has given us a sell signal. If this was to get back above the trend line, then maybe it might have a close or two above it, give you a buy signal, and then get back underneath the trend line. And it may well flip flop a little bit and be quite volatile. You would be better off avoiding a share like this. If you sell this because you've got a sell signal and then get a buy signal, maybe leave it alone. You don't have to trade this share. There's hundreds of shares out there. Trade and find an easier setup.